So I wanted to do a deep dive on the financials of a publicly traded company. Just a walkthrough, some security analysis. I'm based in Dallas and I travel every week for work as a consultant, so I'm very familiar with American Airlines. So I chose them. The ticker's AAL, and yeah, we can start here. Consolidated statement of operations. This is otherwise known as the income statement. And in the financial notation video you saw before, you can see this is in millions. So these last three digits right here are in millions. So this is 42 billion, 10 million. And this is their most recent 10K for the fiscal year of 2019. So you can see their operating revenues. This is what they made from their main line of business, which is flying people around the world. So passenger revenue, the bulk of their income, flying people like you and me, they made $42 billion. Cargo, just delivering packages for businesses and whatnot, 83 million. And then other, you can look in the footnotes to see what that other revenue is, but I'm guessing it comes from, I don't know, maybe fees, maybe credit cards, other partnerships, for a total operating revenue of 45 billion $768 million in 2019. So that's operating revenue, how much they made from their main line of business, which is flying passengers, and then operating expenses, how much did it cost to provide that service to us? And they break it down by line item. You have aircraft fuel and related taxes, 7 billion, salaries, wages, and benefits, 12 billion. So that looks like it's their largest operating expense line item. So that's, to pay their pilots and air traffic controllers and all those things. Regional expenses, 7 billion 500 million. Not sure what that is, but you can find that in the footnotes. Maintenance, materials, and repairs, 2 billion 380 million. Now, for an airline, I'm surprised this is that low. I would expect maintenance to be much, much higher, but it seems like it's a relatively small part. So what, about 5% of their operating expense. So other rent and landing fees, 2 billion. Aircraft rent, 1 billion 326. Maybe they don't own every plane that they use to operate. Maybe they rent some of them. Selling expenses, 1.6 billion. Depreciation and amortization, 1.9 billion. So, depreciation is the decline in value of their physical assets used in their operations, so their planes, real estate. And this, for a business, is they can use to deduct off their 45 billion in income. They can write off some of that depreciation. Special items net, 635 million. Don't know what that is, but you can find it in the footnotes if you really want to know. Other 5 billion. So for total operating expense, 42 billion 703 million. Now, I've heard that airlines are notoriously unprofitable. I think Warren Buffett has a joke that goes, how to become a millionaire: start with $1 billion and buy an airline. So you can see that, when you net the total operating revenues of 45.7 billion from the total operating expenses of 42.7 billion, you're left with an operating income of $3 billion and $65 million. So This is otherwise known as EBITDA, earnings before interest, taxes. Well, there's depreciation in there. So it's earnings before what? Interest and taxes. So it's EBIT. And then if you add back the depreciation and amortization, you'd have EBITDA, earnings before interest, taxes, depreciation, and amortization of around 5 billion. And that is often the multiple used by institutional investors, private equity guys, to value the profitability of a business. So you can see some of their non-operating income and expenses in parentheses. So interest income on maybe on cash that they have, 127 million. Interest expense for their financing and debt, which I'm assuming they have to buy these expensive airplanes, 1 billion, 95 million. Other income, which you can find in the footnotes, 159 million. So non-operating, these are expenses that aren't related to their main line of business. So maybe that interest expense comes from, property, plant, and equipment that isn't planes. I don't know. I need to look at the footnotes, but non-core business expenses, 809 million. So you take that away from your EBIT, and you have income before income taxes of 2,256,000,000, and then you add your income tax provision. So that's money set aside to pay taxes, which I believe under the Trump administration, corporate taxes are around 21%. So when you subtract that reserve that they have to pay their taxes, businesses spend first and pay taxes later. Individuals like you and me, we get taxed up front before we get our money. So they have this income tax provision. And that's actually what my brother does as a corporate tax manager for one of the big four firms. He just helps these large corporations file their tax returns, their tax provisions. But you're left with American Airlines, you can see in 2019 has a net income of 1,686,000,000. So think about that. They made 45 billion in total, and net after all their expenses, interest, tax provision, they're only left with $1 billion. So yeah, it's an expensive business to operate. And then you have your earnings per common share. You take that net income and you divide by the shares outstanding. $3.8 basic and 3.79 diluted. The diluted is going to be slightly lower because there's more diluted shares than basic shares. Diluted is inclusive of products, assets that could be converted into stock. So if maybe American awards the options to employees and they haven't been liquidated, they can always maybe exercise those and there'd be more shares. So any kind of shares that could be executed are included in that diluted figure. So you have a higher denominator and that lowers the EPS number. So that's their consolidated statement of operations, or their income statement. And then going down, we can see what statement of comprehensive income. And I don't really want to look at that. Let's look at their balance sheet. So the income statement, I should note, this is for the year ended. So it's their whole fiscal year of 2019, which the balance sheet is at a certain point in time. So this is their assets and their liabilities and their stockholders' equity as of December 31st, 2019. And as we all know, the accounting equation, assets equals liabilities plus stockholders' equity. So their total assets of 59 billion will be equal to their total liabilities, so total current and non-current liabilities, plus their stockholders' equity. So it kind of all nets out to 59 billion. But let's start out at the top. Current assets. These are liquid assets, things that can be turned into cash within 12 months. So you have your straight, cold hard cash of 280 million, short-term investments, maybe treasuries, notes of 3,546,000,000, restricted cash and short-term investments, 158, accounts receivable from customers or debtors, 1,750,000,000. So this is related to their business. So aircraft fuel, they could sell that. So that's an asset. Spare parts and supplies, they could sell all of this stuff. So it's an asset. Depreciating assets, maybe the fuel. I'm guessing they don't actually hold on to it. They have rights to fuel that they could sell to other companies that could use fuel, other airlines, manufacturers, or whatnot. But that is 1.8 billion. So prepaid expenses under the accounting rules are under GAAP accounting. That's an asset. So total current assets of 8,206,000,000. And then operating property, plant, and equipment. So these are liquid, assets. And, they're things that they can't sell that easily, but they do have value. They use them to make money operating their business by flying planes, so it's considered an asset. So flight equipment. Again, you can dig into the footnotes, I'm sure, to find this, but flight equipment. So maybe that's the plane in and of itself. I don't, $42 billion, they're probably not referring to like the mask on the plane and other things, probably the aircraft, ground property and equipment. Again, it's kind of, I'm not a industry expert, but I'm guessing all the little cars and all the equipment that they use to service the craft to get passengers on and off the craft. That could be part of that line item. Equipment purchases, deposit. It sounds like it's just cash, but maybe it's kind of prepaid. I don't know. It sounds like a prepaid expense, but I don't know. So something that they use to purchase equipment, some sort of security deposit to purchase, ground equipment or aircraft materials. And when you net all those, you get your total property, plant, and equipment at cost, 53,654,000,000. And property, plant, and equipment is often referred to as PPE or PP&E. So that's at cost at the time it was purchased, but you can see they take out their depreciation of those hard assets of 18,659,000,000, and this is a tax write-off on income. But their total property, plant, and equipment net as of December 31st, 2019 is 34,995,000,000. And what's this line item? Operating lease right of use assets. So operating lease right of use assets. Yeah, I don't know. It sounds like an intangible, but 8,737,000,000. And then their other assets, goodwill of 4 billion, intangibles net amortization 2 billion, deferred tax asset 645 million, and other assets 1,237,000,000. You can find this in the footnotes if you really want to know what those other assets are. So their total other assets, 8 billion. Total assets in total 59,995,000,000. So that's their total assets. So yeah, assets is liabilities and stockholders' equity. So the liabilities are money that they borrowed to buy those assets from banks, from lenders, and stockholders' equity are the capital paid given to them from investors to purchase those assets. And that's why it's called a balance sheet. It has to balance. Assets, your assets have to equal your liabilities and your stockholders' equity. So let's look at their liabilities. Their current liabilities, kind of same thing as current assets. These are liabilities that they're expected to pay back to their creditors short term within 12 months. So you have current maturities of long-term debt and finance leases. So loans that need to pay within the next 12 months, 2,861,000,000. Accounts payable, their accounts that they need to pay to maybe other companies that they do business with. If they have a partnership with Dasani Water to service their planes, they need to pay Dasani back on an account. So that's an accounts payable. Accrued salaries and wages for their pilots and their flight attendants, 1,541,000,000. Air traffic liability. I'm not familiar with the airline industry, but air traffic liability. Not sure what that is. Doesn't matter. It's an expense or it's a liability. Loyalty program liability. This is interesting since I'm into credit card churning. Loyalty program liability. So this is the A Advantage rewards program. People have their credit cards, they accrue miles, and they are able to get free airfare. So this is probably counting all the A Advantage miles outstanding that they would have to they'd have to true up. They would have to provide that service for those outstanding points. So it's around a $3 billion liability for American Airlines with the A Advantage program. And there are many ways you can get points from flying, from their dining program, their shopping portal. There are tons of ways. Operating lease liabilities, 1.7 billion. Other accrued liabilities, and then when you net all of those line items above, you have total current liabilities of 18,311,000,000. And then non-current liabilities, these are kind of long-term. They have more than a year out where they need to meet these liabilities. So they have long-term debt, 21 billion. This is interesting. Pension and post-retirement benefits. Very few companies have pensions anymore, but some of them had them in the past, and they still need to service those for those defined benefit plans. They need to make good on those. They probably don't offer them to new employees for them betting kind of employees that probably started working there before the early 2000s likely had pensions, and they receive money for life, to my understanding. Loyalty program liability. We see this line item again. These are probably points that expire greater than a year out, I'm guessing. So if you add this 5 billion to the 3 billion, they have around 8.5 billion in total in advantage points value that they would have to provide service on for free. Operating lease liabilities and other liabilities for a total non-current liability of 41,802,000,000. Right, and then the other side, on the accounting equation, you have assets on the left-hand side, you have liabilities and stockholders' equity on the right-hand side. So you can see that, just alone, the liabilities are like around 59 million, and the total assets are around 59 million. So the accounting equation is almost assets equals liabilities, and the stockholders' equity portion seems very small. So let's dig into that. So common stock, 1 cent par value. What is this? 1,750,000,000 shares authorized. 428,202,506 shares issued and outstanding at December 31st, 2019. 460,610,870 shares issued and outstanding December 2018. Okay, so what this really means is, this 1 cent par value, that's kind of the real value of the stock. With the shares outstanding at December 31st, 2019, that is around $4 million. Now, the line item that really matters is the additional paid-in capital. It's a publicly traded stock. Every time you buy American Airlines stock, you're not buying it for 1 cent. I don't know what it's trading at right now, but the premium that you pay on top of this 1 cent is the additional paid-in capital. When you buy the stock in the markets, American Airlines gets that capital and it's added to their balance sheet. It's added to the asset column on their balance sheet. They just straight get that cash and they use it to conduct operations, or they invest it, or they use it to service debt, or a number of things. But when you buy the stock, this is what you're representing right here, that additional paid-in capital over the par value. And you have accumulated other comprehensive loss of 6 billion and retained earnings. These are the net profits retained in the business and distributed to you, the shareholder, in the form of a dividend, and that's 2,264,000,000. Total stockholders deficit 118 million. So you have your total liabilities and stockholders' equity of 59,995,000,000, and you have total assets of 59,995,000,000. So the balance sheet balances. And then lastly, let's see what they call this. Okay, yeah. So income statement, balance sheet, and of the big three financial statements, the statement of cash flows. So there's 3 sections: cash flows from operating activities, which are the normal activities of the business, flying airplanes; cash flow from investing activities, whether they do like M&A or or that they hold like treasuries, any kind of investment that the firm does, and then cash flow from financing, so any kind of debt issuances or restructurings, the money that goes in and out of that. So cash flow from operating activities, net income from the business, which we saw above from the income statement. And there's a bunch of line items related to their operations: depreciation, non-cash, pension, share-based comp. Right, so these are kind of things we all covered before. This is just showing like the cash flows, the flows in and out of the business from their operating activity. Same thing from their investing activity. So it includes CapEx, capital expenditure on aircraft, leaseback transactions, short-term investments, So any kind of M&A, CapEx activity, and then financing, money that they get from issuing bonds or debt, all goes here. You can see those cash flows into and out of the business. So those are the big three financial statements of American Airlines. It's a publicly traded stock. I fly American Airlines, being based in Dallas, and it's pretty interesting. The most shocking thing that I saw, I would have to say, is their operating expenses. I wouldn't think that their biggest line item on operating expense would be salaries, wages, and benefits. I, I would expect the maintenance, materials, and repairs to be a lot higher. There's always delays related to plane maintenance or something wrong with the plane, so I would have figured that would be a much bigger line item on their income statement, but I guess it's salaries and wages. Does anything on the balance sheet stand out to me? I don't really think so. It's kind of like what I would expect. But yeah, American Airlines. This is just kind of a balance sheet overview. I want to look at an airline. I don't invest in any of the major airlines personally, but I think it's pretty interesting to look at the financials of companies in different industries. An airline is going to look a lot different from a bank. That's going to look a lot different from a utility. That's going to look different from an oil and gas company or from a software company. So doing a deep dive on these financial statements is just interesting to learn about different businesses where you're investing your capital. Having specialized knowledge of an industry, could help and provide you some advantage, having a better understanding of it. But I think it's always good to kind of understand, every business, kind of learn new things. So I think I'm going to keep doing some of these financial statement overviews of different companies, of different industries. But this first one, I thought I'd cover American Airlines. So I have a flight early tomorrow morning. So, I'll be thinking about it, thinking about the pilot and his line item on here. He must be getting paid pretty well. But that's just a high level overview of American Airlines financial statements.